Hello traders, and welcome to the second video within the section number 5 of the IPDATrader's private mentorship course, where we talk about risk management. And this video, guys, is going to be pretty straightforward. What we're going to be doing now is designing a risk management system and testing it out in multiple trades, right? I've prepared some trades. We're going to be designing a system, and we're going to be applying the rules that we've created for ourselves in order to manage our position. This should be pretty straightforward. This should be pretty easy for everyone to understand, right? If you watched the previous video, you know that we have different criterias within our risk management system that we need to define and determine in order to have consistent results. Because as you know, consistent results equals consistent executions and management, right? If you really want to have consistent results, meaning you're taking profits consistently, you want to have a consistent way of actually taking profits. So without any more waste of time, right, let's actually jump right back here. And as we said, we're going to be designing a risk management system, more specifically sort of aimed at a trade management, right? Because as you know, we do have two different ways that we look at risk management, and refer to video number 1 if you're confused with that. But we're going to be focusing on the trade management side of things, right? So we're going to be sort of refreshing the criteria that we need in order to create our system, right? As we discussed within the previous video, we have to determine our stop loss placement, take profit placement, we have to determine our partials, and we have to determine our risk mitigation, right? So let's move this to the side, and let's start over here with stop loss placement. So the rule for stop loss placement that we're going to be using is variant 1 / variant 2. If you're confused with this, you should go watch the previous video once again, because variant 1 and variant 2 is covered over there, right? We discussed them very in depth, what they mean, what we do, and how we do it. So that's the rule that we're going to be applying for our stop loss placement. Now moving on into the take profit placement, right? Take profit placement, we're going to be using structure and liquidity to determine our take profit. And do not worry, this is all going to make much more sense as we go into the charts and actually start looking at trades. So this is what we're going to be doing for take profit placement. Now, it is important that we define what partial means within our risk management system. And I'm most likely going to be dropping a template that you can fill out so that you can have your own risk management system that you can take the time to test and potentially implement in your trading, right? And I can assure you, if you implement it properly, if you take the time to backtest, consistent results are going to start rolling in. So what do we mean by a partial? Well, every time I say partial, I'm referring to 50% per partial, which means every time I take a partial, I'm reducing my position size by 50%. And that is a rule that you can have for yourself. So we're going to be keeping it over here. Now, what else do we need? Well, we need a way of mitigating our risk. And this is pretty simple once again. So risk mitigation. Our rule for risk mitigation is going to be the following. Whoops, my bad. Let me actually try once again. Our rule for risk mitigation is going to be the following. 1 to 2, or break of structure, equals stop loss mitigation / break even. So this means that every time I hit a 1 to 2, or a break of market structure occurs in my favor as I'm in the trade, I can mitigate my stop loss below lows or highs, or to break even. Both scenarios are possible, and I want to decide that in regards to the trade that I'm actually taking, right? So this is the rule for risk mitigation. Every time we hit a 1 to 2, or we have a break in market structure in my favor, or we're going to be adding partial achieved, partial achieved or a new partial is achieved, I can move my stop loss to break even or below lows or highs, whatever you want to do. And as we said, we're going to be looking at trades, so do not worry, this is going to make much more sense in a second. Lastly, in order to determine where we close our position entirely, right, in regards to our take profit placement, which means completion, right? Completion is going to occur at external structure slash range, and this is going to make once again more sense in a bit. So this is our system. Let's quickly review it so everyone understands what our risk management system currently looks like. So in order to determine our stop loss, we're going to be using variant number 1 or variant number 2, depending on the trade. I will decide that as a individual trader. Now, in order to determine our stop loss, we're going to be using the help of structure and liquidity. Completion, which is closing the trade out, is going to occur at external structure or range. And when we talk about partial, we mean 50% of the position is going to be closed out, right? So understand that. Lastly, for risk mitigation section over here, every time we hit a 1 to 2 or a break of market structure in my favor occurs or a partial is achieved, I can then move my stop loss to break even or trail it however I want to do that, right? So this is it. I hope the system that we're going to be testing out is pretty clear for you guys at this point. It should be, right? But we're going to be getting into more details as we look into the trades. So let me quickly stop recording. I'm going to be preparing the screenshots and we're going to be implementing this system into possible trade scenarios that you may actually want to pay attention to. So traders, here we are once again, and we're going to get started testing our risk management system, right? So if we take a look at this chart, this is actually Euro USD on the 45-minute time frame over here. And this is actually pretty recent price action, so you can see how things apply and work currently in the live market. So we do have a point of interest over here, right? If you watch the point of interest section, you understand that this is an IFC candle below Asia low liquidity. This is sort of a classic setup that you really want to take. You have a point of interest over here, you have a Asia low liquidity over here. We take that into a point of interest and we start moving higher. What does that tell you? Well, it should tell you that if you have your confirmation occurring in this area, you should take buys in order to take price higher, because we do have a Asia high liquidity over here. We do have some trendline liquidity building up, so you understand that, hey, the likelihood of price continuing higher once we mitigate this block and actually shift in market structure on a lower time frame is pretty high. Now let's talk about the take profit placement, right? And completion, which is something that I previously talked about. So why is our take profit over here? And this is important. Well, it is over there because you need to understand that you're playing within a range. If we follow internal structure over here, you can see that we're sort of bearish at the moment, right? So the probability there and likelihood is that we can get a move up, but once we get and trade into this opposing zone, which is external structure or the end of your range, as you can see, then you want to get out of your position because you don't know if price wants to continue up or if wants to reverse once again, because there is a probability it can do that, especially after grabbing this Asia high liquidity over here. So that is the reason why our take profit is over here, our completion. That doesn't mean that we're not going to be taking profits on the way. That just means that once we reach into this area, which is an FU candle, and that is explained in the point of interest section, you want to get out of your position, or you want to close sort of 90-95% and leave a small runner if that's something that you want to do. So let's start implementing our risk management system, right? Let's say we get the setup, price shifts, and you're happy with taking buys, you take a buy right there. So let's go into the next picture over here. what do we see? Well, we see sort of the shift, right? This is a 4-minute time frame. I believe on a 1 minute, this wasn't a complete shift. So we see that we take the buy, and now let's talk about the stop loss placement. This is pretty simple. As you can see, there's no confusion right here, right? Our stop loss is below the low that initiated the mitigation, which makes perfect sense and is really what you should be doing to be safe, right? You don't want to be the trader that is taking this order block over here and expecting price to move up from this area. Even though it can do that, you need to understand that we do have another point of interest over here, and there was a probability price could have come lower, traded over here into this block, and then move higher. So we understand that, and now we understand why our stop loss is placed over here. Great. Let's talk a little bit about our partials and take profit placements, right? So far, we understand that our completion is up here, right? And the reason for that is already explained. So let's talk about the partials. Well, as we said in regards to partial, we're going to be partialing at structure and liquidity. Where is structure and liquidity in this picture? Well, we can argue this is structure over here. This is a established higher high that is currently making is like down for a higher low, and that should continue into a new higher high because we have all the other confluences, right? So this is an area I may want to partial at, or I may want to pay attention to, right? So we understand that. We also have a Asia high liquidity over here. So we understand that we want to be partialing over there as well. Reason for that is because there is a probability that price comes up, takes the Asia high, and sharply reverses back down. So let's continue. What else do we see? That is in regards to our partial placement, right? We're going to be denoting sort of 50% is going to be taken off over here, 50% is going to be taken off over here. So we continue. In regards to risk mitigation, it is what we explained previously within our system, right? At a 1 to 2 or a break in market structure, our stop loss can be trailed or can move to break even. So if we look over here, right, we can identify that this is some sort of internal structure right here, this high over here. So if that is close to a 1 to 2, or is a structure point you're happy with moving to break even as we trade above it, then you can do that, right? So we're going to say that as we trade above this high, we can mitigate our stop loss below the low that was left over here or move to break even, right? So we understand our management, and this is pretty important because now you know what you want to do and you're not stressed out trying to sort of guess what is going to happen, because you have a system for yourself and you can just stick to that, right? You say to yourself, here, once we trade above this high, we go to break even, or we move our stop loss below this low, whatever is more comfortable for you, right? Once we reach above this structure point, or we're hitting the block over here, I want to be closing 50% out. Once we take the Asia high out, I want to be closing another 50%. And finally, once we hit the edge of our range, the opposing external structure, I want to get out of my position or sort of close 95% and just let the rest run, yeah, indefinitely, whatever you want to do with the rest at that point, but you've taken majority of your risk off at that point. So let's play this trade out. Let's see what occurs. As you can see, price trades higher, right? At that point over here, we would have moved to break even, and let's actually remove this stuff and actually apply it properly. So now we understand that at that point we were broken even. We had no longer any risk in this trade. At this point over here, we took our first partial, which is probably a 1 to 4, 1 to 5. I cannot properly measure this distance over here because I don't have the tool. So at that point, you took profits. Now, once again, at the Asia high, once that is taken out, you take more profit, and you can potentially say to yourself, hey, We can also mitigate my stop loss here so I can lock in a little bit more profit. But that is something that you want to determine for yourself. Okay, we're going to be following our system, and our system says that we partial out structure, liquidity, and can move to break even. So this is exactly what we do when we complete our trade over here. This is a great example of a successful trade management, which allowed you to catch a very good move over here. Once again, you don't need to be trying hitting home runs every single day. Consistent profits will take you very far. So understand that and keep that in mind. Let's continue to the next slide over here that I've prepared for you guys. And this time we are looking at a sell position, right? And as you can see, we are using the same principle in regards to our take profit placement, right? This is why consistent profits will come, because you are using the same principle. We are targeting the opposing external over here, right? Even though I would probably not look into this point of interest to take buys, I still want to be paying attention to that, right? Because there is a probability we can hit that in reverse. But once again, we're just testing the system that we've designed previously. If your system tells you that, hey, you hold till the end, then you can do that. As long as you're happy with that and that is something that you've tested out, then that's fine. So let's continue with this trade. Now we understand why our take profit is over here. This time we're using variant 2 for our stop loss, right? And we're going to be moving into the next slide. As you can see, we've split our risk over here, right? Reason being is because if we want to be taking a sell over here and we want to be putting our stop loss over here, it is probably going to be too big and not worth it. Hence why this time it actually makes sense to split your risk, right? You say to yourself, hey, I take a sell position over here with my stop loss just above this area, and if that fails, I still have my other position will get executed with the stop loss above the high. That if that trades above that, then I know my position and my trade idea is wrong and I want to get out of the position, right? So you split your risk, you take one position over here, you put your stop loss over there to maximize your risk to reward, and you place another one over here just in case this one fails, because you understand that there is a probability we can trade into this order block before moving lower and still continue down, right? So you don't want to just put all your risk in this entry over here with your stop loss over here and just watch price how it takes you out into the origin of the block and then trades lower and you're left wondering, well, what is happening, right? So that is pretty simple, right? Our stop loss placement is over there. Our partial areas are going to be this structure point over here. Maybe if we can look left, we could see potential trendline liquidity over here or below this low. But if not, then that's fine. You take one partial over there and you complete your trade over here. And this is going to be all huge profit. So we continue. We understand that. Let's see what happens over here. So you can see price starts trading lower. So at this exact point in time, you are broken even. Once we trade below this low, you are broken even, or your stop loss is mitigated above this high over here. Whatever is more comfortable for you and whatever you think is right. But once again, we're still following rules. We are just allowing ourselves to have some room to play with. So at this exact point, you can move to break even. You can sort of mitigate your stop loss, right? You could say to yourself, hey, at this point, I'm taking profits or 50%, 60%, 20%, whatever your system tells you. As we said, we're going to be taking 50% off once we reach over here and 90%, 95% as we complete our trade. So let's continue and let's see what happens, right? Whoops, let's see over here. Okay, this works. So price trades lower. As you can see, you were broken even at this point in time. Price never really came back out to your break even, so you're still in the trade. Price, you can sort of track structure, right? Price sort of continues bearish, and now you can say to yourself that, hey, once we reach this area, 95% of my volume is going to get closed out, and whatever price does at that point, I'm happy with it. Right? So we continue over here. This is pretty simple and straightforward. price continues way lower, and you cannot see it over here. Well, you can see it over here, and price actually went ahead and traded much lower, and that is okay. You're not always going to be getting out at the very low when you're selling, and you're not always going to be getting out at the very top every time you're buying. That's why we need a system. So we take the profits, and we're done with this trade, right? There's nothing else you need to do rather than journaling that, and that's it. So we continue over here, guys. Let's see what else do we have. This is a different scenario over here, right? We do have a point of interest over here. Once again, we're still following the same rules, sort of a origin. You have a mitigation, a liquid one over here, right? If you watch the points of interest section, you understand that this is a liquid mitigation. We trade higher, we move aggressively down. Maybe you decide to take an entry over here. Once again, we're just sort of going through examples. So let's actually zoom and see what we have over here. Whoops. As you can see, you take your entry over there and you're targeting the external structure once again. And if we go back to the previous picture, you will see why. Because you need to understand that you are internally bearish and that it is very likely that price can come up, fill this area, and continue lower. However, if you're fine with taking the risk of saying, hey, I am seeing structure this way, and this is absolutely valid, and I'm expecting another leg up entirely, and you want to target this area over here or a POI over here, then that is absolutely valid as well. I'm just giving you sort of ideas and following the risk management system that we've previously designed for ourselves. So we continue over here. Now you understand what we're targeting over here. Let's continue, and let's see. You take a buy over here. You say to yourself, hey, I want to be broken even maybe as we trade above this high, because this is a 1 to 2 or more. I cannot measure it, but I'm pretty sure this is more than a 1 to 2 or very close to that. So once we trade above that or above this area over here, you can go to break even and potentially take partial over here or take a partial over here, whatever you want to do and whatever is comfortable for you. So we continue, and we're going to be seeing what's happening now, right? We see over here that we now traded above this high and this high, so you're most likely broken even and with some sort of partials. So now you're letting positions run and expecting it to trade into this block. You could potentially refine it to this block over here to have a bigger RR, right? But once again, this is a pretty standard trade. So let's see what actually occurs. As you can see, guys, price comes right back down right after taking this high where you decided to break even or take partials, whatever you want to do, and comes back down and takes you out. Well, that is fine. You've taken a partial and you're out of the position. Not every single trade you take is going to win. Not every single trade you take is going to run to completion. Please be aware of that and understand that very well. So we only managed to catch some partials and broken even, right? So we never lost actually any money. We continue and we see what occurs over here. We continue and we can see, right? We can see, and you need to be comfortable with this because this is going to occur. Price comes back down, barely takes you out of break even, moves higher, right? And you're now watching this and saying to yourself, oh man, what did I break even? What did I do that? No, you're actually following your system. So you actually did a great job, right? Price comes back up, then trades back down, up, down, and then sort of takes off and hits your take profit level. And you need to be okay with that because you are not always going to be getting out at the very top, as we explained before. You have to follow the system. And if the system tells you that once you break a structure or you hit a 1 to 2, you're going to move to break even, then you have to do that. And sometimes that will mean that you will leave some profit on the table, and other times it will actually save you from potential trades that were going to be reversing on you. So be comfortable with both scenarios. I cannot stress this enough. If you're sort of mad or yeah, sort of mad because now you got taken out. Oh man, I got taken out and it moved in my favor. Well, you cannot trade that way with that mentality. You're not a robot. You don't have the magic ball. You need to play with probabilities and you need to create systems to help you out. You can never be 100% sure a move is going to occur. You can always play with the probability, but you can never be 100% sure something is going to occur. So traders, that is going to be it for this video. I hope it made sense to you how we created a risk management system, how we established some rules that we can follow, and then we applied that to the charts, right? I know this is hindsight, but I have no other way to teaching you this stuff if it's not with using hindsight, right? Because I cannot be recording how each and every single candle is printing so far. That may actually be something I will do in section number 6. But for now, we're in section number 5. So we're talking about risk management, right? We created a system. We established some rules, right? Remember the criterias such as stop loss placement, take profit placement, defining a partial, right? What is a partial to you? Risk mitigation ideas and that all that sort of stuff, right? And completions at opposing zones or external structure. So you actually have to take the time to create something that fits you. Once again, I will be leaving a template over here so that you can download that and fill that with your own risk management system that you want to test, that you want to try, that you want to use. So guys, I will see you guys very soon. And until that, I wish you all good and profitable trading. Please remember to take notes, rewind, use the community channels, send analysis, send charts, because that way you're going to get better. But with all that being said, I wish you all good and profitable trading, and I will see you guys soon.